Hi, today we'll talk about the basics of credit scores. What is a credit score? It is a numerical assessment of your credit worthiness. Put simply, a number that denotes what kind of risk you present as a borrower to lenders. It is based on information in your credit reports reached at by a mathematical algorithm by the agency providing the score. Just like your credit report, it is constantly changing based on your credit behavior. The number is usually between 300 to 850 or 900. The higher, the better. Though there is no absolute cutoff for good or bad, it depends on your credit file and your specific situation. With a better credit score, you are deemed lower risk for lenders and can therefore land better terms on your loans, with around 750 being a common threshold for good terms. The credit scoring system is not perfect. It attempts to gauge the future by past performance, which, as investors, we know doesn't always work. But it's all we got for now. You have not one, but multiple credit scores. The most commonly known one is called the FICO score, named after the company that first came up with this idea of a credit scoring algorithm. Remember, you have 3 credit reports from the 3 credit bureaus? They pay FICO to generate your scores based on this data. Therefore, you have 3 FICO scores, one each for the 3 credit bureaus. Also, since the information in your credit reports at the 3 bureaus are not identical, you can expect some variation in your scores. Up to a 20-point difference is acceptable. Different banks and lending institutions use different credit scores for different purposes or products. For something simple, such as a credit card approval, they may only look at one credit score. For higher risk loans like mortgages, lenders like to look at all 3 scores. They will generally pick the median score. If you are co-borrowing with a spouse, they look at the lower of the 2 medians. For a long time, FICO didn't have any competition. Then, in 2006, the 3 credit bureaus banded together to create VantageScore, an alternate scoring system to compete with FICO. Though VantageScore is gradually gaining ground, at least until now, FICO continues to be the market leader. Over the years, there have been several versions of the FICO and Vantage scores. The latest versions are FICO 9, the FICO 8 still continues to be the most popular, and Vantage Score 4.0, which rolled out in late 2017. Apart from these base credit scores, there are also industry-specific scores, which have greater predictive accuracy for specific situations, such as auto lending or credit card approval. The FICO mortgage score is notable in that it uses older versions of FICO, which are less forgiving to negative credit information. With mortgages, lenders really like to err on the side of caution. So how do FICO and Vantage Score compare? Both of them look at the same basic credit factors, payment history, and the like. We will delve deep into this in a different presentation. But there are some key differences. To have a FICO score, you need to have at least a 6-month history of credit usage, at least part of it within the prior 6 months. With Vantage Score, only a 30-day history of credit usage suffices, and Vantage Score will go back 24 months to look for this history. So those with a spotty credit or those towards the beginning of their credit journeys, for example, young adults or new immigrants, are more likely to have a Vantage Score rather than a FICO score. Next, when you are rate shopping for a new loan, FICO gives you a 45-day window to shop around without dinging your score. Vantage gives you only 15. The importance of this lies in the new credit inquiries component of your score, which we will talk about later. For those with a poor or short credit history, Vantage Score also looks at alternate data, such as utility and phone bills and rental history. FICO also recently released a version that utilizes this kind of data to score previously unscorable people. The scoring systems have been criticized in the past for being too exclusionary, and therefore their newer versions lean less towards negative credit information, such as those obtained from public records. For example, they ignore collections that have been paid in full and are more forgiving to its medical bills sent to collection agencies. Where can you find your credit scores? Getting your credit scores has never been difficult online. A simple Google search will yield a number of sources. However, many of them are not your real scores. You always want to look for the FICO or VantageScore trademark. Even if they are your true FICO or VantageScore, until lately, you used to get the consumer version of your score called your educational score. This version is different from what a lender will use to consider you for a loan. They are likely within the ballpark of your real score, but in a situation where a difference of 30 or 40 points makes a huge dent in the terms of loan you can secure, it is certainly less helpful. The credit scoring companies have worked with banks and lending institutions to give consumers more access to their true scores. And now, many banks and credit cards offer free updated credit scores as a perk for account holders. VantageScore is widely available for free via many personal finance services websites if you sign up for their subscriptions. If you're willing to spend the money, you can always purchase your credit scores either from the credit bureaus or directly from FICO. Combine this with your annual free credit report from annualcreditreport.com and you can keep a pretty close eye on your credit. This was the basics of credit score. Thank you.